Welcome to my activities for life. Appreciate you guys. Thanks, how do this was I promise. And Brandon Go over Go Magnum Loans, as well as President Go Magnum Loans. And today I'm going to talk a little bit about the difference between broker versus manager. Although it was still a very important. Right up in one manager history. Anybody here know what Dodd-Frank is or was? By show of hands. Dodd-Frank.
It was the bank act or whatever the perhaps based on more transparent and the protect the consumer. You pay in your house.
Yes, so I'm gonna give you a history lesson. As an agent, what's the typical commission that you earn?
So percent for lucky.
What if I told you, okay, well, one out there, you do all this work. $1,000 bill, we made it 3%, 12 grand, right? And we were split, you might see between, 7 and 9,000 if you see the entire thing. But if I told you every single thing you do now, only 1%. Want to get rules system? Okay. I say that because when they passed Dodd-Frank, that essentially happened in mortgages. You had a federal government passing line statutes that affected what us as retainers make. Which sounds crazy, right? It sounds like it's happening. That's what happened. And when they did that, they passed certain laws, rules, regulations. Okay. And it's created corporate perspective. When I got in, I was a banker. It's up to our families. Down with it. Go to the teacher, talk about online, what are the benefits? Okay.
Was the Opus whatever was that a bank, or did you work for another bank first? Or you work
for e-mortgage bank.
E-mortgage.
They work for Correspondent, which is when I say bank in this regard, it's a lot of retail banker.
Right.
Right.
It wasn't like this.
All right, so one fundamental difference, people don't realize this, is licensing. Okay. I want to dispel a few myths that are out there. Anybody make a Wells Fargo? Steve Bank?
Oh, I did back in the day. That was my first business account with Wells Fargo.
Citizens. Right. Submit by hero. I'm going to go to my bank because I think they're going to give you a better deal. Right.
Well, because they think it's like insurance. They think if you bundle something, you'll save, and they think the bank is also going to do that, and they don't. It's not insurance, but that's where people get the concept from. And I only know that because I asked the list of people that told me that. I'm like, what makes you know that? Or what's your experience with that? And they said, well, with my insurance company, I said, it's not insurance. You don't get a bundle in a savings deal. They don't.
Don't answer this. Make it right. Your license, your license. Okay. Now, what if I told you that someone can go out and show houses? They're in a commission on the license. At retail base, they're not licensed. They're what you call a registered rep. Okay. So I myself. Oh, sorry. Yeah.
Oh.
Well,
You want your no. Hold on. It was just about you want your NMLS.
yes.
Okay, there we go.
So at a retail bank, you're what we call registered reps. You don't have to hold MLS license. They be licensed, so you're required. And it has a big exam. Pass the exam. And you have to apply for each applicable state license. So if you look at this is me here, this is me, okay, it's Brandon Bailey. I do I'm licensed in California, Delaware, DC, Florida, Georgia, Pennsylvania, and Texas. Now I'm unique because I also hold the company's ownership broker license too. Okay, and I do 2 licenses. Well, we brought us on. So great.
It's not very important.
People are talking to the retail banker, at like citizens from having that person's license. Now, they have it in a less number, but they're not required to do the same requirements that we require to be licensed.
So there's like one individual at the bank that holds their,
Sometimes it's done. I'm not. At Go Magnums, yes, a lot of retail banks, you have to be part of a registered rep. And if you hold it in a less number, they can talk about organization, but they're licensed under the bank's strong. So what's gonna happen is I work with someone who's the involved originator, like myself, where it was on it, they're gonna be subject matter expert in more programs and business. So
it's like, why does the bank allow to close a loan and you're allowed to close a loan, but they don't have anyone that actually has your credentials there?
that's the device.
Well, who the hell is a charter? We can't go yell at a charter.
A charter is using the rules actually, money. Data files, things like that.
So just because they're a bank and a charter, they do what you do, but they don't, but no one there really has to know what the hell they're talking about.
I'm not saying that it's training, but I don't have this experience levels. I sell the full spot.
So it's like for example, I got, right, I can go into the dating auto sales and get out. But it's not the same experience if I go to the auto dealer in Washington, where it's, but it's kind of like the same thing, like we're getting, Sharice's auto shop and sell whatever kind of car, but you're not gonna get the same experience if you don't go to like that, you know, dealer and I'm everything.
So, yeah. So I.
It's hard to hear, and they said we gotta use our government.
It's not over. It's like that, will say, oh, well, I'm gonna go to Wells or my bank, their deal. Now, not saying that can happen. Okay, but in order to get, a better deal, if we follow on behind this money, that's typically means you have an investment that works somewhere over $2 million. Right. You have that, that's what I'm saying, yeah, okay, so that's a huge piece of a misconception that's heard out there is that these individuals don't hold the same license, right?
So when you say they, you're not talking about credit unions, but a lot of people have credit unions.
So it depends. It depends, like, again, at credit union, I say 95% of them are not gonna have this license. I know that if they don't have a federal credit union, they aren't going to have a license banker, but most credit unions, again, they're the charters. Then the side of the group, that's is the bank charter, or sign, or the bank. All right. Yes, you don't mind. All right. Yes. The part of what it was, second one, very good point, that acts on Magnum Loans. What is that? What is that? So the company is founded as Magnum Corporation, was sort of, we're independent, did a rebrand, change in the company, we changed our goals, right? So here are our 4 pillars. I hate reading from slides, I remember reading that good at 40, so I'm gonna read off from the slide. Mission: help home buyers achieve the American dream of homeownership without stress, sluggishness of traditional banks. Whether buying a new home or refinancing an existing one, the process should be simple, easy, cost effective. Okay. What's the American dream?
False sense of freedom and autonomy.
I want to say financial independence, right? That's the goal.
Yes.
And it's funny because when I work with a client, you know, I know that again, so buying a house is important. Most clients want to create something called wealth. And so when we have those conversations, I'm always focused on the bigger picture, right? And a lot of your retail institutions, they're just focused very, very transactional. They're not thinking about, okay, well, this person is an investor, I want to be one. They're not thinking about transactions. They're focused on. Okay.
Like the Amish course of blinders on.
Great enough. Culture. Mortgage real estate industry has a reputation for being boring and outdated. Go Magnum culture centers around fresh, creative perspective, adopting new technology, embracing change. We're the cool kids, unapologetically dope. Now, so I can look at the part, actually, and I say that because right now, millennials are 95 billion, and it's the largest of the graduate. So, right, what does that mean? You know, talk to your parents. I guarantee my dad, who works at Marshall Kennedy, it's 7 blocks away. He's been there for 25 years. Okay. Do you know someone? You imagine being a job in 5 years. Unsolvable.
I was like, yeah, I'm not rushing that, first of all, but I would never.
It's something.
Well, the only way you get a raise now is to leave a company, go to another one, that's been proven, whereas like when your parents, my parents were growing up, it was go to college, get a degree, go to technical school, get your trade, and be loyal, you would get paid and taken care of with loyalty. That was the mindset.
Yeah, it's.
And they had pensions and stuff like that, yeah, that they didn't even alternative.
So those days are over. Right now, I'm saying you're a nurse practitioner or not, something like that. You won't say that the chances of someone staying at a job in 25 years, they're very different. Okay. Now, I've been in business since 2009. When I first got in, I was taking applications by hand. Right? Now, I can't tell you the last time I took an application. I have a fine conversation for the company. I send them away. With that, if they go in, it really takes 5 to 7 minutes. Okay, it's all important. Creating people I need followers. Right? I get notified. Hey, Therese, with your application, please review it. Right? We have to count. Now, more importantly, on the realtor side, each realtor working has their own portal. Okay? They create their own approval versus review. Okay? They can control the authorize. Right? So very, very big on the second. And our goal is to continue to bring that business.
I just would say that one of my favorite parts about working with you guys is that portal because it helps manage your pipeline and it almost gives me like a to-do list, like once a week, I'm like, let me go look at this and see if he can help who's not. And then also, for example, I finally just got a buyer that's ready under contract. We were looking for almost 7 months. And we looked at stuff from 190 all the way up to 245, which was her max approval. So I didn't have to call you guys every time I need to put an offer in. I could just go adjust the pre-approval amount to what I needed. Because, yeah, because you don't want, just because your client's approved for 245, if you're putting an offer on a house for 200, you don't necessarily want the seller and the listing agent to see that she's approved of 245 because if you're not giving the full price, then they're like, shit, money. You know what I mean? So it's really awesome to be able to go adjust it for each house or the phone. Or if you work with an investor and they're doing multiple, you can know what their max and minimum is, and you can just go adjust what you need instead of having to follow the other guys.
Our real estate if it's a retail bank, the experience is the same, let me tell you. Not doing that at 5 o'clock, you won't have control of your pipeline. There are times when I work with a realtor partner and I will call them and say, hey, look, son's right. Oh, Brad, you got followers. I'm like, no, follow your pipeline. Oh, that's right. I referred to you back, in June, last June. You're right, okay. So it also a way to make sure that you maintain your business, you retain your clients. Okay. Expectations. Go Magnum Loans is built using criminal power formula. Our successful in signing in direct proportion with our ability to communicate our value. So every time I have a conversation with a client, it's not about transaction. My goal is to get them about our costs, right? A lot of times people think that, oh, well, just buying a house, they don't understand the actual financial piece of buying a house, right? Budget. 95% of the time, a person making more than $50,000 a year, right? I can qualify on the market. Why is that? Understand it's taking anywhere from 18 to 25%, which means you're making $70,000 or $80,000 a year. The really clients seeing like 55%.
Yeah.
In our system, we go off of gross income. So I have a conversation with buyers and say, look, I can agree with you, so however, based on your income and debt ratios, here's where your should be. I want to be possible. I wasn't worried about paying the cable bill, and that was working because I didn't figure previous mortgage first. That's super simple. Those kind of conversations you have, I'm sure people will understand. Yeah. So that's
Have something that just dawned on me. It was early last year, and I think that especially I know, let's say it's a new agent thing, or if I wasn't a new agent last year, but I never realized that how uneducated the masses are about mortgages and payments and stuff like that. So now, whenever I'm working with a client, I have an extra question step in my process because I had a client that was pre-approved by one of my agents in PC. They made good money. They got pre-approved for $420,000. In the client's mind and in the agent's mind, everyone just said, oh, well, if I got pre-approved for $420 and I go get a contract for a house, then I'm just gonna be able to afford that monthly payment because the mortgage broker said I can, because that's how they took it, and that's not what you said, they say this is what you can afford, and that was a key, I was like, oh my God, we lived this like 15 years, and that has never come up for me, but the type of clients I work with are usually already business owners and like more savvy, but you're dealing with a first-time home buyer who happens to have a good credit, making money, but this is their first time getting a mortgage. They might actually think, oh, well, the broker says I'm pre-approved for $420, then whatever that, like, he must know what I can afford. And I was like, oh shit, we gotta say not how much house do you want, because everybody wants a $100 house, right? But how much are you paying right now? Like, if they're paying rent right now, are you comfortable with your current rent payment? Do you feel comfortable paying a couple $100 more a month? With that being said, at $1,700 a month, you know, maybe your house is $250 or less, right? If you can afford $2,300, then maybe you have a $325,000 house. So it's that intricate conversation, again, why it's important to so to say that you have a whole financial literacy conversation with your clients, because this happens. I've had agents call me at summit table with their body, and they just now paid attention at summit table how much their monthly payments are paid. Yeah, and it's too late.
right. So I appreciate that. So the other thing is too is I'll use 420,000. 420,000 really is very different. 420,000 about the time zone.
Yes, what do you?
It's tax maybe $1,200 a year. 420 really is tax like $3,000. So one of the first conversations after, what do you pay for? Where do you want to pay to be? That's one of the first things I'll ask before we have a conversation. Because it's going to establish we call an ability to repay. So anyway, let's see that's actually one of the dominant guidelines. First method, that's called the ability to repay success. Okay. The last one, vision. So my theory, and it started happening already, called the rise of the giving model. The gig, right? I remember growing up, my mom worked for Ben. He said, Brandon, you know, mom has her job, she has a job. What's the job? Your own business.
Yeah.
Right. What's funny is now, his Williams or Gen Zers, among college or high school, are wanting to hop directly into their own gig. Whether they're an influencer or had excellent beats, or you'd be surprised, you know, basically they're actually making more money, right? But the problem is that installments or finance, they take it finance. So at Go Magnum Loans, there is a place for right? We're going that I think it's to make, you know, $100,000, it's just great, easy, and
No, they are basing they're basing the but he
based on loans. I'm gonna do that program. But the question is,
no, it's definitely
I'm gonna try to buy like next year. I'm from Texas this year, so I
your tax statements, your the 1099s,
What we'll do is this, when I get to that slide, I'm gonna use you as a barbershop on for an example. I'll put all the pictures of how I bought like this.
We want to talk to the space.
All right, so, most people don't realize there's four places you go to get the mortgage, right? So I took some time to outline four different places to get your son. So the most common place that people think they want to go is we call a retail seller servicer. Okay. By retail, what are we saying? Anyone can literally walk it off the street, sit down, apply for a mortgage. Why are they retail? Public access for one. Number two, they sell retail products. What's retail product? Credit card, personal loan, or demand services. Okay. They do mortgages, but it is not the core offer. Okay. Most people who go to a retail bank, they find out, wait a second, this is really the best thing. And everybody who said, hey, I was talking to a broker or like security, their entire perspective changes. Okay. All right. Also funny is that, now I always said the question to you guys, what credit score do you need to qualify? E, okay, 580, okay.
Qualified,
I feel like my feelings from the accurate.
I've seen zero get pulled off. I think that if you walk into a bank, you need to be around 700. If I talk to you or Christian, you guys have pulled off some miracles because I have, people that made good money but destroyed their credit because they didn't know about it. You know what I mean? So.
All right, so the true answer is you actually don't need a school. Wow, the person that because it's so easy to sort of. Now, the Bible is when I'm scraping for deals and 2 years in, calling through leads, trying to make it deep, I can turn third and golden. I was done with this. So I had a client, it's Valentine, the name. Didn't do a credit. Well, she did the earring. Okay, that's all. She had to do the way turn it out. What I do is I would take those items and put them on the report that is called an annual score. For the annual score, I had alternative credit for about $136, slight back in 2000. She was so happy. Because the only thing to do, brand now, that's in final now. I would say, hey, go to creditcards.com. It'll literally tell you if you have no credit or you qualify for it. You have average credit or you qualify for it. You have free credit. In 60 days, you have sort. And most banks always default secure credit card, so give it 60 days, two credit line for this score. Because on the sort, it's environment, you experience the model. Now, thanks, Mark. Anybody here make the credit union? Okay. Why do you make there?
So my head, I'm looking for my head for baby. I used to have a baby American thing. No specific reason. Any money, so this is not.
When I made military, I banked with the Edmund Federal Credit Union before because I was at Air Force Base at like they, which is there, makes sense.
Look at the parents. Right. Parents. Because like for example, if you're say there's the Pennsylvania State Bill already read that state hormones.
Yeah.
And the hormone get paid. Great institution, but at the same time, if it's harder, they're living their own life. Okay? They're living their own way. It's going to apply to a mortgage. It's going to make that person so off. So they're the hardest place to be qualified. Isn't that hard?
So if someone comes with pre-approval from credit union, you should know their credit is common and they let them. But they might not hire.
Well, see, they don't. They're credit union popular. However, managing. I've had that before. You may have to check their income. Because if I'm on the phone with you, hey, you come into the branch, water. My credit is 793 in a year. I'm not check. Okay. What do you do? higher sales.
Oh, they don't actually verify.
Exactly. That was my point. I was getting.
So the client that I had.
Yeah.
She got her big food. From 10.
Right.
I don't know if you remember her.
But I just told you that. I said, hey, look, this isn't a real group because in order to qualify, these things have to be done.
So she didn't have to do what she got.
And
I feel like she probably could have.
That doesn't mean she gonna make it all the way to
that's
something.
the thing. Because what happens, it gets underwritten. And underwriter, they do what? They peel the layers back, which I will affront.
The same thing with that's the work you're gonna have to do. So you might be pre-qualified right now, but she's never gonna make a summer table with that money if she doesn't want to give up, but for having something back up.
Part, hey, so this part, I mean, so that ain't, so those things come very, very important. Okay. Now, the last two places where I actually worked personally, was mortgage management or the correspondent. Correspondent, not a bad place to work. The problem is this. Let's say you had, say you had a $50 million credit card, right? Whatever you want to do. Got it. So these places have something called warehouses. Okay. A warehouse line is literally a massive line of credit. Okay. Let's say you had a branch, two branches they did, let's say 25 million a month. Okay. So in 1 month, two branches with 25 million, that's $50 million. So you're warehouse line with big sludge. Okay. In order to get that, you have to sell those loans off to the secondary market, to a retail seller. Mr. Cooper could be Wells, Citibank, but what happens if you do that? You're not doing the rules. Okay. So you're taking this 25 or 50 million, you put it in buckets, credit buckets, risk buckets, and you're selling. They get something called a service release premium, which takes a ton of money. But at the same time, one, you are on control of the process, and then two, there are a lot of deals that you cannot do. I'll give you an example. You go back to summer last year, rates have really started flowing, right? We had a lot of correspondents that were pitching bonds, right? All of a sudden, right, the market shifted. They almost paid. Hey, that was close the paper, and the bond rate goes to 7%, 3%. Here's the whole 4%. Cancel. That's what happens. The due deals that we write. So even right now, it's very common to talk about correspondent. And everyone's still set it in the 960 where we're in class. Okay? But the important thing I learned is I had a deal with the corporate the other. This league literally was the most qualified client ever. Because of the condo guideline and the seller service response people didn't like the guidelines, they would run along. So I did it. Right now, broker. That's what I meant. As a broker, you can choose 35 or 30 options. But then you simply buy it. That makes the credit, it's money in the bank. It's more, I can qualify. I'm going to qualify the experience in what you're going to hear from me. That financial period or what's happening next. Okay. Get a for the house. Okay. You need to go somewhere. I'm going to be asking all these, I'll say hard questions, but it's a question that it's really intended to make sure this decision makes sense. Right. Any questions about each one? Is that helpful?
Very. Like even though correspondence is together for us,
Right. So now I'm going to go to the next slide. Someone's brought up the kid. Love fairy tales. Right. I don't read fairy tales.
yeah, we
Introduce the guy.
Are we Disney fairies up?
well, how about,
The two fairies and stuff like that?
I like, Jack and the Beanstalk.
Okay.
That was a good one.
Sure.
That was up against.
Yes,
And that was a big word.
Absolutely. It's not the kids, dream about it, talk about it, they're so passionate.
Okay, all right, okay, so I would say my favorite one was invoices.
Oh, that's a good one too.
The other one, so I agree because these shares are going antagonist, protagonist, problem, solution. Right, well, I'm having this. So there's this main form order that was there for Seattle. That and ever one square you arms that he doesn't have a really fat and wants to look good every single day. Now, obvious, it's also sort of the thing. I'm very nervous with you guys because you can't find me better. Someone who brings me better, I'm going to be involved in that. Right. So there's a person that's far away from them who says, hey, you know what? I actually have a new battle and more stress than he says, bring it to me. Okay. There's a big there without here that needs to walk out. See him, you can see him, so he's the version. And first bring it back. He goes, well, first, I can't see that. So you know what? Someone class, very high salary. You buy these swallows, these that. Oh, you know what? I do see it. And so, her. You sure put that. And so when the king is the first of the battle, that the big bear town, he actually walks out and makes a fool of himself. Meanwhile, the merchant made off with all his all.
Well, some Italian artist just sold nothing for $18,000 and said that it was, so that, yeah, he literally, an Italian, like, it was like a podium, there's nothing on it, and somebody gave him $18,000 for essentially the concept of nothing. Yeah. Yeah, he was like, I don't get it. Yeah. Only a person with a certain level of intellect can see this.
Exactly. Now, what was the problem in that fairy tale? The problem is that king wanted to press, wanted to merge. Okay. Now, the problem in our industry, you have unique buyers. Those two buyers are the same. Credit issue, the great credit income, and right, the ratio. So we're in an ever-changing environment. We have to have an ever-changing solution. Lending guidelines. You tell me a lending guideline.
Well, like I said, debt to income ratio, depending on what type of product you're dealing with, like your debt to income is what's like.
So yeah, is that it?
Yeah.
You know, it is called 9 out. I see you should go. You know, that's not. Conventional, it's 40. However, at a retail bank, we have a simple guideline. We need 2 years of employment. Another guideline. If you're self-employed, we need 2 years of work history. Right. I can do a loan, conventional, 1 year work history. For someone that's self-employed for 5 years. If you have a retail bank, let's say we need 2 years. Why is that important? Because if a person claims nothing, and let's say 2023, you're buying 2024, literally all of that 1 year, I can qualify. So all my business owner clients that I work with, I say, look, you're trying to make a power move, power decision, where you decide by the trigger, half your account. Okay. You do first, finish with the go. I see so many deals that way, you have no idea. Most banks by default, you have to go pay. They require years. Choose whether that loan is standing or break down. Okay, it's very, very important. Quality of service. Right. I'm pretty sure you can't have that service. It's gone. Right. You know, just walk outside.
He literally has a storm involved.
Yeah, for real. Well, good one, right. Now, I'm using myself here, so if I did see visualize.
Yeah.
Grade school record. How many students were there? Anybody know? Over 50,000. Yeah, they college town, literally. Right. About 57 minutes away, small school called Buffalo University. That's where I went. Yeah.
What's the one?
Now, it's like an idle conversation. I believe in this 4 hour programs. So, my college classroom, when I was a senior, actually a freshman, maybe had twice many people in this room, maybe 12. As a freshman, right? You go to the professor's house.
The professor knew your name, like the professor was remember the student's name, whereas at NSA,
Yeah.
does the number.
Hey, my spot.
Oh, it's not, I'm jumping in next.
Now you're, again, so you're, we're reviving it, right?
Yes.
Yeah. And that's the experience. So the part of the local book. Yeah. We're long distance data. He comments one person. I would look into the file and say exactly what's how many times call the Lord and say, well, I don't know. I call the whole details because the originator doesn't know what's going on.
Or God forbid it's the weekend, and
Exactly.
the banks and all the other places don't work on the weekend.
Exactly. So quality of service, rates. The free environment, man. I mean, we're all out supposed to do something. And you're trying to get back and forth. I don't know what's going on. Yeah, I get free. And then Steve. I should have. In the last 60 days, there's been at least 7 loans. I could have both listed this. What are freeze? That's right. I did. I did, yes. Normally I was gonna take a snapshot, but again, I could just tell you. But I just haven't stood out. That's super important. You know how many times say, hey, I can disclose the release, and that's what I do. So it's a take right answer, so go, say of course. I'll ask those, right? The story is going to end up in Georgia. If you have more than 17 days of a sale contract, you're all for with it. That's great. Yeah.
Yeah, it goes with that fast down there.
That's it. Right. So, slide please. So the solution is that it is the law. Custom mortgage products. Okay, we're gonna talk about your business owner in a second here. I'll tell you one story about a farm person I think that last month. Right now, it's regional. We ran out of T bank and turned down right away. It's a good difference. It's your yards. I mean, negative 19,000 3 in a row. So I'll turn it out to. However, we have a home. Let me see your last 6-7 months deposits. We would actually deposit between $13,000 and $15,000. There. To get the most true business, right? It's the deposits. Right? It's the pot. What's coming in, what's coming in. That's a true measure of business. So look, after your job, look at the other tail. Okay. And that was around 134. And all Smith's ratio, meaning only 10% of his income goes to expenses. I qualified this out on $11 a month before the house was leaders from Delaware, turns down. Or to know, you qualify, right? Which will be. Okay. So again, I really customize that solution for them, and it's not as hard as you think. No, God, I don't know this. We mentioned the rule I got in the slot generation, right? Okay. And overlay is the additional rule on top of that one. That's something that and a Excel file servicer or a response can find that they have overlays. 2 years after. No gifts on investment properties. Okay. Right. Exactly. Technology, I spoke about that. Strategic partners. It's funny. So, I think strategic partners, people that are online, right? One of the transactions, title, insurance, There's a system called AUS. It stands for Automated Underwriting System. Okay. What it does is it takes a look at the credit characteristics borrower, the debt ratio, their entire package. Anyone against a Fannie, Freddie, or government loan has to do this. Okay. Now, you're someone who's walking the credit title. Okay, it's very simple. It's so simple about having to deal with over $10 in home insurance. It wouldn't run through.
Yeah.
Right. So if you have a partner who say, look, man, I need to make this policy work, need to premium down, you know, those conversations are very, very, very important. Okay. And lastly, fast underwriting process. But some still low was approved, somebody's going to look for house.
Have a backup context for the fast underwriting processing. Earlier this year, I had a PC agent who was fired and refused to get like a second look or shop around from Bank of America to like you guys or someone else here in the office. And they were very adamant about it. Like they should off of their interest rate as far as I was trying to explain, like I already know I can get a better interest rate. Once I can get better service. They ended up losing their house because of the underwriting and process, the slowness and the inability to actually talk to a real person and the same person every time. It took almost a month for underwriting to review their file. Now everyone got copies of the agreement, saw what the settlement date was. The back office, the back end, and the underwriting departments and stuff of these big, huge banks, like to say they don't give a F about your contract and what those dates say is an understatement. And also, not only is your client just a number out of hundreds of thousands and millions of clients that they have or people things they have going on, the employee that you're dealing with that you call your what do you call it? It's like mortgage officer, it's your loan specialist or your mortgage specialist is what they're called in the bank.
Your registered rep license.
Yes, your registered rep is not licensed. You might get lucky and get to talk to them every time you call, but it's going to be Monday through Friday, 9 to 5. But when they have to call the own employee of the bank that was supposed to be helping you, only has an 800 number to call to talk to their own underwriting department, and they never get the same person twice. So your situation and your needs have to be re-explained 100 times, which is why the buyer ended up losing the house, because the seller didn't want to extend for the 6th time. And the only answer we could give as the agents was, well, this is just what underwriting is saying. We had no legitimate reason for the holdup. The buyers were actually good. They were good money. It was literally the bank not giving a shit about meeting the deadlines. And maybe they had too many files on one person's desk. Their loan was not denied. They just weren't closing. We have to extend the contract, and the seller was like, "We don't want to extend, you're in default." So because the seller wouldn't sign the change of terms, they lost their deposit. All because also they want to be very stubborn and use their bank. So they lost $5,000 because of Bank of America. Real life story earlier this year.
So yeah.
Yeah.
These are the nuances, right? They would change over to another bank.
They could have changed over 3 or 4 times. They were just stubborn. They swore their bank up that.
This year, this summer, we involved in that situation where the person said, my brother said, then it's the agents. So we'll use right.
Yeah.
I feel wrong had for 3.5 months. We did course. And it's also redundancy. It's $700 purchase.
You only had a great balance.
Now, you know, on the agent side, you see 21 change. Yeah. You look, you got it. I don't know what y'all talking about, but listen, it's ridiculous.
Yeah.
I believe 7 days. Wow. Right. Yeah, James Augustus, my goodness. Yeah, so that happens a lot. It's scary. Right. So. Okay, so let's talk a little bit loan specific. Okay. There's really 4 categories of loans. There's more, but to keep things simple, we're going to say 4 categories. You have your conventional, this is conforming non-government, There's something called GSEs, stands for government sponsored enterprises. Okay. Normally, if someone is going conventional, it's going to be a Fannie Mae or Freddie Mac loan. Nowadays, government loans, FHA, USDA, VA. These loans are either 100% insured or 100% guaranteed by the full faith of the United States Treasury. What does that mean, right? So it means that if this person defaults and they can't make the mortgage payment, and the house goes to foreclosure, the government, the Treasury is going to go into their community chest and pay the servicer back money for the loan. That's settings, right? Non-QM, that's my favorite part. My favorite because there are rules. There are rules, but again, you get to be creative. I'll give you an example. Earlier test is something about a DSCR loan. It stands for debt service coverage ratio. Means you buy best property with income. Okay. What about the borrower? That person is qualified?
Based on the income that the property generates.
Correct. Yep. So as long as the rent is greater than the mortgage payment, I can close it. As a matter of fact, mortgage payment was $2,000, from 1,600, and so goes. Right. So this bucket right here is the way of the future.
What is someone's credit? Like, they've got good credit with the BSCR, right? They just want to provide income.
I can go down to a 640. There's a lot that says 620, but 640 is minimum. But yeah, of course, that 660, 680, the rates get very, very quick. Like right now, on BSCR, it's pretty much that and that with a full down conventional investment property. So I'm an investor. I want to close it LLC. Okay. I want a great rate, and I don't want it on personal credit. Okay. With non-QM, I can do all those things. If we go conventional, I can do none of those things. Who's going to put down 1%? So fair rate.
So I'm just like, here's my 20%, here's my LLC, here's the property and the income, like if you the rent roll or whatever, and you can like.
Well, let's say the property. Okay. If we get an appraisal, something called a 1007 or 1025, and it goes rent it. I have to go off projected market rents with a big requirement. Really? Yes. I have close to all this, right? So how it works on moving here, so there's one more million, it was a zero. Okay. Got a brownstone, the brownstone, who happened was a 6 unit, it had a dealership for all house. Got a move, made it after now. I spoke him, he was a little bit paid $6,000 a month for a quad book. I said, look, let's do sort of work. I need you to get these rents to this. So literally, about the at least a sign. Okay. Yeah, security products. Here's the bet, like 2.5 million. He owed $760 on the bill. I gave him $580,000 takeover. And his bill, the mortgage payment being higher than the actual mortgage. We're at $60 a bit. With that money, he wasn't for the problem. The case what was no income, the required credit, he was in sevens, okay, and he was going to get fresh piece of sign for refinance. Right. In New York, which technically, when it comes to the state act, that's the amount, but for DSCR, we don't have to. Okay. Private money. This is where things are a little funny. Okay. Private money, hard money. Okay. Very, very non-traditional. Construction financing. You want to bridge loan, buy, invest in property at speed. You're not going to read that. Okay. All that mission and all that. Okay. In this environment, the investors keep the market going. About 35% of my business right now is strictly investing. Bridging. Well, they call it bridge because it's literally, it's you started here, it's supposed to get you to the other side. But a bridge loan there you have. Okay. They construct the bridge, right? Bridge for temporary equity, on financing out. But Commonly, it's really hard money. Commonly, okay?
So, how much percentage you said your, business competitors?
35%. So, big portion. It is.
I'm sending email to say that, collection.
Cool, okay, yep.
I support you.
I appreciate it, correct. All right, so, now we're gonna talk product specific for stuff, okay? That market, the strategy. I'll say, hey, and Eric, hey, Eric, I'll say, take a brand card, I'll see returns for last years. Now, normally as a barber, you probably have some calls, so you see, so these a basic product calls. We're getting 80 grand, this is 10 grand, that's it.
But these numbers reported.
That's why it's a fine. It says requiring customers. So this product, what I do is, I can literally go off and say this for last year, or get a product involved from tax professional. Show them we made. Okay, and from that, I can take them, you can literally put it. 10% down, right, it's good. I was at 15 or 20 to be probably where you want to be. All right. We use the last easy one.
But you said something, trying to include.
Yeah. So the good part about that is this, these are five measure, I would have them file, literally, the water out. These filers, I'll have them file with the filers after all time. And I would say, the last one, you're wrong, so. But at least the water is starting, 67 years. Right, that's what we big call. Right. So, and he does that, I mean, now it's for the brand. He'll see it when he gets taxes, brand. So,
We have business owner clients, you have to have a conversation about like, what have you, if they haven't filed taxes, like, what have you been filing? Because they'll tell me like, oh, I made $200,000 a year or something like that, right? But when they call their tax returns, they use a bunch of deductions and deductions that they can, because they don't understand. So what I always have to, what you need to explain to them is, depending on what you've been filing, you might have to wait different, or you have to do different type of loan, not go do conventional or anything like that. And you have to make a decision. Do you want to finance something in the coming year, like a house or equipment or stuff, or do you want to still look growth without the taxes? You have to make a decision, one or the other. You can't, you cannot have both. You're either gonna pay your taxes and then like represent you can get your money back on the other end for grants and stuff like that, or you're gonna have to do a conventional loan product and or down because you don't prevent it. You're gonna lose out money either way. It's how you want it to look, right? And like for example, I've been self-employed since I was 20. I always have known like, am I gonna buy a car this year? Am I gonna buy a house this year?
There's a couple of people on the second floor.
No,
Like you had to get my.
well, it's different.
I know, it's further.
they don't
Yeah.
see documents. But for more is that I'll say, look, this credit's like 7 something. I'll say it will file, less than 20,000 for years previous, and then file some.
Yeah.
Wow.
I'm gonna give it, follow it. Sure.
This one is a slice of people on this one Christian is from go fix the flip. My personal favorites. A lot of people are trying to convince them kind of investors, developers, and they don't have any experience. We have a program where we literally are able to get people whatever personal finance is huge. You don't need to send that down. First time, it'll be $5 down, but if we 50% down on an $8 house, we'll finance the entire control. I asked somebody to have this product. The great thing is that, and it's set a bridge, right? You refinance on to the SR fund. But I think it's really one of the last local cities for the first time where you sort of buying the deal, the fix, the flip, that's the big money, right?
And that's the difference in my school.
It's specifically more investors. To agree with the right. We want to buy out, so higher environment like this, I'm able to start the interest rate 1, 2, or 3% below the actual approved bond. Let's say for example, I bond that it earlier. I would come a bond on every first year, start at 2.5. You can imagine that in our house, rate of 2.5, the payment is a lot lower.
Yeah.
It's in the 400 also. Okay, so it's a very violent. And it really is a solid vehicle. On our side, we wait for what it's a lot more competitive requirements.
If the seller pays for it, does that count as seller's assist, or is it separate? Because now I'm max out on the seller's assist, we can ask for it, so that is in itself, we max out. Or it can't even show us the max.
Next slide. Moving on, this is the SDR, simple property income. Kind of talk about the rate, a lot of time, but just so again, someone that's doing a hard money loan, refinance out, they can exist. Someone closed an LLC, they can exist. It is not a corporation, right?
I got a question that I don't see, does there have to be, let's restart, I'll just, that, right?
I bet people who started LLCs at one time. Why?
He's not gonna get it with LLC, right?
Okay, so multi, also programs for 35 their agreement, you have to check. Now you do a conventional 5% down. That's all. It's huge. That means that's about self. This is never, if the rents are high enough, you can finance it, check. But it's not happening. Buy a house on 5%.
So you're saying that this is for a long, the back straight out? You buy, you talk about.
Yeah,
right.
yeah.
So with this, as I thought, I think right there is what I'm at, pretty much looking at right now. Question on the next is that, like, does it have to be occupied? Or if it does, it's qualified.
So if you buy a weekend, you market rents fall.
That's what I was
But
wondering.
you have to live on, like you buy it, like,
What year? Yeah, so that's what I'm wondering, have seats out that are on there that, it may happen for you to only one, right? You need to buy it, but you can go project it, so you can do it now, I don't know.
It's market rent.
I have no idea.
so this is 1 to 2 families, so really it's just like,
But you,
we're twins, right?
no,
It's just a bigger problem.
but you have to be qualified to cover that whole by yourself. All the even though it's projected for that, right?
No, because I can use the projected rent or the market rate rents, the capital rent. I could set it 100%. So if you was 4 family, you live in one. Let's say each of the $1,000.
Yeah.
That's 3,000 times 0.75. That's 2,250. I can answer. Wow.
See, that's what I was wondering, because I'm looking at, so I don't even know what unit I'm really trying to qualify for. They're not going to hire it involved. I thought minimum pay. Okay.
No, we're getting paid off. Go cash. So this refers to one of our grant programs. It's actually 20,000 now. This is old. Because I had to create the presentation myself. With this one, again, there's a person coming in, person home buyer, maybe less than 91,000 a year. I can give them upwards of $20,000 the grant assistance. They qualify. And so again, a $300,000 house, I have a deal right now under the contract. I have a lady that's bringing less than 2 grand to the table. Could that? Okay. That feels good.
Yes, you go very well.
You can use, so if you're going FHA, you can use a grant for down payment assistance, really first, but only for closing costs. I got time for down Slide here. All right, go up percent. So actually we changed it. It's not a percent more. It's 100% finance. It's 0% debt. The buyer who pays less than 91,000 a year, across to that, they can buy 0% down of it. But if someone making 90 grand a year, they're going to back it around by 3.5. Okay.
So I guess it just goes from monthly payment, the whole thing, right?
Correct. You're the same variation, it's financing. Yeah, this doesn't make sense. How much you do with the finance level, 680, 660, at a 620 or 640, the rate's a little high, we have to better. Yeah. So we have this finance and conventional, versus variation. It's fine. And no, we're out of time here. I wanted to put the cost in for a second of this. Working with the world, the generous is the analysis of the documentation of the sheet. It's gonna be a lot more depth, right? Had to do all that sort of last week, then we were registered. It's a yacht on one side, she travels. He had a loss of negative $70,000 in scheduling. That's our typical too. So previous lender did not, she didn't lie. Taking 120 a year. And, I didn't feel, ask the returns. I believe it. I didn't see return it. Because they didn't see it. They didn't see it. That's it. Right. Well, we didn't get that analysis shot. It's not getting more else. It's less true. And I should sit at the machine and she didn't have to. Sit at the me, like, wait a second, go through, make a turn. Yeah, you go, we didn't let this. These are the type one discovery.
Yeah.
It's in the set. That's literally how it things. Right. Go to the next slide. This is old. I have a few more that I've recently found this fine. I really kind of show this is a scenario of some people that use 100% financing during there when they bought the table. So purchase price is 260. Okay. They did 3% down, so rates were high since last year. They're just under 7.5. Go to the next slide. Can you come on doing this little box for me? So you can see the finance stack, right? She had an EMD, first money deposit, 2,050. Loan was 2,000, sorry, 250, 200. Philly first grant, seller assist, additional down payment assistance. She got back $1,400 a table. So literally, she
Got paid to buy a house.
right. You did math for less than 1 month of rent she bought a house. Right. This is in Mount Airy, where I'm from, which is actually a pretty nice place to live. So this is real. These things are real conversations. This really happens. Next one is the personal favorite, smaller deal, fine over 180. Got rate at 5.99 in November last year, which rates were nowhere near that. Okay. This deal took me to help it back and got it close. She did 3% down as well. Go to the next slide. So this entire down payment was actually a grant. Her loan, she had 2 more grants. She got back almost $800 a So this lady actually put no money to buy a house. Okay, so this is real. It's possible. So the other person,
like over almost $35,000 in
gross. Yeah, exactly. So if you're telling, oh, my people don't have any money, you know what I mean? And they have decent income, okay score, you make something happen. This is real. Right? So you're calling through your leads, trying to find your money. It's not a problem. We have grants for you. This is a real situation. These are real people's lives that were affected. Now they're homeowners. Okay. But that's the Go Magnum executive team. I'm Brandon Broker. This is Mark Christian.
I went out the picture a little bit there.
Yeah, here now.
Yeah, that really looks like you right now. Like it's that right.
Any questions? Questions?
Brandon's office does areas next to mine, for those of you that you find him.